I'm Chris Reed, Managing Director of Neometals, and today I'm going to tell you how we're going to transition to become a gold producer. So at Neometals, developing gold and lithium operations is in our DNA. So we first developed the Comet Vale gold mine and mined that underground for a number of years until 2009. That's now owned by Gorilla Gold. We then developed the Bluebird mine and mill at Meekatharra, refurbished that. We sold that. That's now Westgold. We developed the Mount Marion lithium project with Mineral Resources and Ganfeng in a number of years. We then moved into battery recycling with SMS Group and built a plant for Mercedes-Benz. And now we're headed back into gold to build cash flow. Corporate overview of Neometals. Historically, we've returned over 82 million back to shareholders via dividends, buybacks, and returns of capital. Where we see ourselves today is rebuilding the business. We need to get back to our former billion-dollar market cap, and I'm pleased to say we have the assets to do that. We currently have an entitlements issue and a second phase of an institutional placement to settle end of May, early June, and that'll give us the firepower to get there. So how we're going to do it is getting back into cash flow, which is the cornerstone of any business. And so for us, Barrambie is going to be the source of that cash flow. It truly is a camp scale opportunity in a prolific gold fields in the Murchison, which I'll tell you about. We've developed a resource in the last 12 months that's enabled us to get mining contractors to come into a 50-50 production joint venture. We'll basically dig it up, or they will dig it up, truck it, and toll treat it, so we don't have to build a plan or wait for any of those sorts of approvals. That allows our geos to focus on building the resource inventory and the mine life. We think gold's a fantastic base to build the business. We're not sure when the global geopolitical uncertainty is going to end, but as soon as it does, there'll then be a big focus on the inflation. We retain interests in critical minerals for both. I mean, we have assets in lithium and vanadium. One is a brownfields exploration in lithium. The other one is a vanadium project that's currently in the project financing stage. Those two commodities are still the most positively impacted commodities as forecast by the World Bank out at 2050, so very investable. But we'll focus on our 100% owned gold at Barrambie, and now I'll just play you an animated video.
Neometals' 100% owned Barrambie Gold Project is located between the Western Australia mining towns of Meekatharra and Sandstone. This prime location within the prolific Murchison Domain is a hub of active gold exploration, surrounded by numerous operating gold mines and processing plants. Having held the project since 2003 with a focus on its globally significant vanadium-titanium resource, Neometals has now recommenced active gold exploration for the first time in 20 years. Situated on a major crustal feature considered vital to the formation of the multi-million-ounce gold deposits of Sandstone and You and Me to the south and Andy Well to the north, Neometals' granted and pending exploration tenure spans 357 square kilometres and covers 40 strike kilometres of the Barrambie Greenstone Belt. Flanking one of the world's highest grade titanium deposits are several historic high-grade gold mines dating back to the early 20th century. Notably, the Barrambie and Mystery mines produced at grades approaching 1 ounce of gold per tonne, with operations extending to depths of nearly 100 metres below surface. Based on historical drilling from the 1980s and 1990s, in 2024 the company announced an exploration target ranging between 335 and 775,000 ounces of gold, which underscores the project's significant potential to host multiple gold occurrences. During 2025, the company completed successful RC drilling programs at several targets, including at the Barrambie Ranges Trend, Mystery Area and at the Ironclad deposit, which is currently being prioritised by the company for early development and near-term cash flow. Recent drilling at the Barrambie Ranges Trend situated to the east of the large titanium vanadium deposit, returned excellent results in the area of the high-grade workings as well as along strike. This footage shows an approximately 1 kilometre segment of the Barrambi Trend, where the recent drilling returned results up to 5 metres at 5.6 grams per tonne gold, including 2 metres at 13.27 grams per tonne gold. Historic workings have been mapped along 4 kilometres of strike, demonstrating the scale of the target. The historic Barrambi Ranges gold mine produced over 15,000 ounces at 29 grams of gold per tonne between 1905 and 1911. This long section portrays a snapshot of the underground workings as they were in 1908. Also portrayed are the north plunging high-grade chutes recognised by the miners, which would have produced at many ounces to the tonne. Recent drilling demonstrated significant exploration potential, returning several significant results below these historic workings, such as 2 metres at 19.41 grams per tonne gold, including 1 metre at 38.4 grams per tonne gold, 2 metres at 11.75 grams per tonne gold, and 2 metres at 7.39 grams per tonne gold. This 1.6 kilometre segment of the 4 kilometre Barrambi Trend highlights the exploration opportunity, especially given the initial exciting results from our first exploration program, testing below the sparse, shallow historic drilling. Opportunities beyond the Barrambi Ranges include the Silver Lining and Kismet prospects, and the Ironclad and Mystery targets in the Sugarstone area approximately 8 kilometres to the north of the Barrambi Ranges. Significant data sets were available from historic drilling, which was used to guide initial drilling. And in June 2025, Neometals announced an opening mineral resource estimate of 13,000 inferred ounces at Ironclad. However, recent infill drilling has increased the confidence in this estimate, and step-out drilling is helping to identify significant opportunity for further resource growth, such as 19 metres at 4.16 grams per tonne gold, including 9 metres at 7.19 grams per tonne gold, located down plunge of the near-surface mineralisation. The Ironclad MRE was updated in March 2026 and now stands at 285,000 tonnes at 1.6 grams per tonne for 15,000 ounces of gold. Significantly, 86% of ounces are classified in the higher confidence indicated category. Based on this updated MRE, the Ironclad scoping study outcomes include the potential production of between 10,000 and 11,000 ounces of gold via open pit mining and toll processing, and generating cash flows between $19 million to $23 million. The broader Ironclad Mystery Corridor has significant exploration opportunities, and initial drilling is providing similar success to that achieved at the Barrambi Ranges Trend, with exciting results such as 14 metres at 11.74 grams per tonne gold, including 6 metres at 26.56 grams per tonne gold, being returned from initial testing below the shallow historic workings. The Ironclad Gold project is well advanced, with next steps along the development pathway to include execution of key agreements, completion of remaining technical investigations, and submission of outstanding approvals documents. Gold occurrences are documented across the length and breadth of the Barrambi project, hosted in various lithologies and of multiple styles. This presents a wide array of targets in both established trends and greenfield settings. With such diversity comes opportunity, the potential for Neometals to build the Murchison's next camp-scale gold project.
And so, yes, we are going to build the Murchison's next camp-scale project, but to start off with, we want to get into production. So at Ironclad, we drilled our first holes there in February 2025. In April, we've been able to announce the production joint venture to develop Ironclad. So this is what the Ironclad mine looks like from a side-on view. So there's the initial pit. We have quite a lot of material outside of the pit shell and inferred. We need to infill drill that to raise it. Certainly the grade and the alteration seems to be increasing as we head down plunge, which is fantastic. And look, you know, it's only very, very shallow. So just think of that as more of a starter pit. The scoping study metrics that we could make up to $23 million. with pretty conservative assumptions. We hope to outdo that by one, making the resource bigger, and to increasing some of our recoveries. So I think, if the best endorsement that you can have is to have experienced mining contractors come in and to do that on a essentially fund all the working capital requirements, fund the transport, toll treatment, then recover their costs and split the profits 50-50. I mean, from our model, that would mean that they'd have to invest about $30 million before they started recouping costs, which we think is a fantastic endorsement of the potential. So we've done a joint venture over that mining lease application. BML Ventures, very experienced contractors. We'll get to making an FID in the second half of this year and hope to mobilize early 2027, subject to that FID. The next asset that I'll go to is lithium. So our Utah brine project, it's actually a lithium and potassium brine deposit. It's an oil field deposit as opposed to your conventional salt lake or hard rock mine. So what we've done is we've been able to do a deal with some friends that own the Lisbon Valley Natural Gas Plant and all the oil and gas wells. What we've done is we've acquired 51% equity in the Utah Brine Corporation that holds about 84,000 acres of tenement applications for potash and lithium in Utah over their oil and gas fields. In a lot of the old wells, there are lots of brines. There's like an underground sea. So we've signed an access agreement with their holding company that owns the oil and gas leases to access 23 inactive wells, all the data associated infrastructure, and to pay them a small annual fee and a production royalty. It gives us exclusive access to existing wells and infrastructure, which will help speed up our exploration and evaluation of the potash and lithium. So, what we see is they're pulling gas from down deep at the top of the Leadville and further down in the McCracken units. And then about halfway down, there's this massive underground sea. Now, the Paradox Basin is about 600 kilometers long by about 200 kilometers wide. We're in a part of that section. We've got a very good holding in there. We know that it is, there are intersections of potentially economic lithium and potassium. And so we are going to work on that. We've just put out an exploration target, which shows that there's an awful lot of muriate of potash, and potash is one of America's most critical materials. They import 96% of it. It's fertilizer. I mean, they're short in the US, they're short in Australia, and also a significant amount of potential lithium. That's based on the historic well access, the well data across the 84,000 acres of tenure. So, the strategic rationale behind that, it's a low cost entry back into the lithium world for us, having developed Mount Marion in 2015 with our partners. We've been out of lithium through in terms of the upstream mining, but we've been commercializing our Eli process technology in an agreement with Rio Tinto that basically takes concentrated lithium chloride or brine through to lithium chemicals. So, we do have deep processing expertise in lithium. These brines have previously had DLE that's worked. I think what we really like about Utah, it's a red state. It's very pro-business. In 2023, it was the Fraser Institute's #1 ranked mining jurisdiction globally. We have high voltage open access power lines running over the project. Very, very attractive prices from 2.7 to 6 US cents a kilowatt hour, which is a fraction of what you pay in Australia or in most places around the world. And we have access to natural gas from our partners through the Lisbon Natural Gas Plant. That's about $1.50 a gigajoule. So once again, very, very cheap. And, the two commodities of potash and lithium really align with the US critical minerals strategy. We're potentially eligible for accelerated federal permitting. We've made, or UBC has made an application for DOE funding. There are a number of productions. We're going to target the US Department of Agriculture fertilizer production program as well. So, we think it's got all the ingredients to make a very, very competitive business. In terms of the forward-looking news flow, we announced the deal in March. We put out an exploration target in the last 2 weeks. The next steps are to take a bulk sample out of one of the wells that accesses those brines. We'll then truck that down to a direct lithium extraction provider. We'll run a pilot. We'll then put out the results, sample additional old wells so that we can define a mineral resource estimate under JORC, then use that as a basis to put out a scoping study. So I think Neometals, we provide fantastic exposure to gold and critical metals, giving the shareholders multiple shots on goal. Gold, lithium, vanadium, we just think they're very investable commodities in the long run. Gold's the focus to generate cash flow. With that, we can then look at developing the lithium business a little quicker, but not until then. Business model diversification from, having 100% near-term cash flow from our Barrambie project via a low-risk joint venture, upside in some of the other projects through royalties and joint ventures. We've got experienced leadership and leading partnerships to get it done in the most capital efficient way. So Utah is a strategic entry into a known lithium and potash basin in the USA. Utah is a stable and supportive jurisdiction for mining investment, ranked #1 in the world in 2023. It leverages that existing wells and infrastructure, accelerating and the exploration and lowering the cost of advancing the project. Historically, direct lithium extraction has recovered lithium at very high values from brines in the area. We have deep lithium brine processing expertise through our 70% owned Eli process, which has got the potential to deliver very low costs from purifying and electrolysis of the lithium chloride that we recover from the DLE process. We're fortunate in that we've got fantastic infrastructure. Even though it looks like it's out in the middle of the desert, it's only 50 kilometers from the nearest town. Most importantly, we've got 2 open access high voltage power lines that run over the project. Attractive power tariffs of 2.7 to 6 US cents a kilowatt hour from Rocky Mountains Power. And we're able to access gas from the Lisbon natural gas plant. The current price is about $1.50 a gigajoule, which is, you could barely transport gas in Australia for that price. And potassium and lithium align with the US critical mineral strategy. We're able to access federal permitting coordinated. We can access federal funding programs. Utah Brine has applied for a Department of Energy grant already, and we'll make subsequent grants and we'll be eligible for support. The US presently imports 96% of their potash requirements, so there is a big drive in the administration to be self-sufficient in potash or potassium, and lithium is obviously on the critical minerals too. So in terms of indicative milestones and news flow, we've got a busy agenda over the next year. We put out the exploration target in the last 2 weeks. We'll then take a bulk sample of the brines. We'll take that down for a DLE pilot. We'll then put out the results. We'll then look at sampling other historic wells to build a mineral resource estimate, and that'll allow us to finalize a scoping study, which is a pretty good achievement for all in the first 12 months. So in summary, I think Neometals, we provide excellent exposure to gold and lithium. It really gives the shareholders multiple shots on gold. The commodity diversification, building cash flow from gold, that's a great foundation for our business. And then we can look to invest in the lithium business and accelerate that a bit later on. Gold is the focus. We do have business model diversification. in terms of a platform for ESG aligned growth. You know, we're mining, but we're not building processing plants or tailings or big waste dumps. You know, our technologies for processing lithium and vanadium are recognized to have very, very low carbon footprint and to be low cost. And we've got experienced leadership and partners to develop our business. So thank you very much for your attention, and I wish you well.